So it was during the pandemic time that all of a sudden Indians had craze around financial markets, specifically in India. And it wasn't because suddenly everyone had become aware about finances, but it was because of one series which had actually released on one of the OTTs. Suddenly, every person sitting in their couches in India could think that merely by having 500 rupees in their pocket, they could create crores of rupees. They got inspired, unfortunately, in the wrong way. And the trend has continued so far. Thanks to some of the influencers who have been regularly coming on various social media platforms and claiming how you can actually turn 5,000 rupees into 50 crores. And that too in a matter of just 1 month. And there have been fancy thumbnails out there. You can see it on YouTube as well as Instagram. And let me tell you, all these people who have been claiming how to turn 5,000 into 50 crore are actually staying in rented apartments. And apart from that, they are even borrowing money from their friends, whom they would definitely return the money after 40 years. Well, ladies and gentlemen, that's why I thought, why not to utilize this platform to impart the true knowledge about financial awareness. That is particularly what I've been doing for the last couple of years through various social media platforms. I am Abhishek Garg, and today I thought, why not to help you out to navigate through this particular maze in which a lot of people are actually stuck and then they are confused as to how to come out of it. I'm pretty sure with the advent of technology and of course Google, it has become pretty easier for a lot of you to understand various financial concepts. But when I'm actually talking about the Indian landscape, unfortunately, we are misguided in understanding a few meanings. And that is precisely what I would like to clear in this particular conversation. The very first thing which I think is very important for all of you to understand is that there is something which is very devilish, which is existing all around us, and we call it inflation. And I don't really want to get into the technical jargons because I'm pretty sure most of you who are hearing about it are not from the finance background. But let's just, for the sake of understanding from a layman's term, understand that the prices of all the commodities which you are trying to afford are eventually going up year on year. And it is not just with various asset classes, it's not just with the real estate, it's not just with the food which you are buying, but almost everything. So you got to understand, the mere understanding of inflation will give you a realization that whatever amount of money you are actually saving and keeping it in your piggy bank may not yield the same value after 10-20 years. Just to make it simple, hypothetically, if you had 60 rupees in your pocket a couple of years back, you could actually go to a petrol pump or a diesel pump and get your fuel done. But today, if you have the same 60 rupees, you go over there, you may not get the same amount of fuel at that point of time. The problem with a lot of people is they feel that there is one concept amongst Gen Z called YOLO, you only live once. And what they tend to don't realize is that this inflation will keep going up, and the only way to beat this is by investing into products which can yield you better returns than the inflation. Now remember, I'm not talking about that famous dialogue by Akshay Kumar, 21 din mein paisa double. These are mostly the traps which you should be avoiding. But what I'm trying to say is there are beautiful instruments which, if you are able to do your thorough research around, it could be in the form of SIPs, it could be in the form of real estate investment, it could be on the basis of bond investment, considering your expertise or the financial advices you're getting from well-registered entities, you can definitely be at par or even beat inflation. So the very first thing which everybody sitting over here or viewing this particular video should understand is you need to have basic understanding around inflation and how to beat it. The next thing might sound a little silly to a lot of you, but you know the trends have changed over the last 1 or 2 decades. What has changed? The most important significant change is because of the ease at which we can actually order stuffs. We have forgotten about the delivery charges, we have forgotten about the premium which we are paying, and we all are actually ordering food from outside. Remember, I'm not against this particular business model, but what it is doing to you is not just harming you in terms of your health, but it is also harming your financial stability. What you don't realize is the traditional way of cooking at your home is actually very important. A lot of you may consider that this is not a good financial advice, but when you deeply introspect and retrospect of how much amount these days you are actually spending by going outside at the restaurant. See, one thing is if you can afford to do that, that's completely different. But one thing, if you're doing it regularly at the name of convenience, you slowly start realizing a substantial chunk of your salaries or your pocket monies is actually getting drained out with these apps. Don't you think learning cooking would make it very simpler? And for guys out there, let me tell you, girls usually like guys who know how to cook. So that's an add-on. So the second most important thing in 21st century is, if you know how to cook, you can save on your health expenses also. The medical bills have been going off the roof these days. One slight problem, once you get admitted into the hospital, you know how humongous those bills are. And sometimes even your health insurance is not going to cover that. So in that case, if you are able to have a sustainable, healthy lifestyle by cooking at your place, that would make your life far easier and simpler. And since I mentioned about insurance, that is another area which we should actually talk about. Sadly, in our country, the penetration of insurance is very low because a lot of people think it's not that important. And seldom people actually buy insurance only because of the tax benefit which they are going to get. Some of them are actually investing into insurance because they have been collabed with certain plans. That okay, if you are investing into a particular insurance plan, other than that, we are going to give you a benefit of investing into equity or a mutual fund. Those are like the combination of plan, ELSS and name it whatever. But let me tell you a secret which nobody from the insurance industry comes and tells you. The best one is always a term insurance. Why? Let's understand, because we human beings often feel that the more complex a product is, the more complex the stuff is, the better it would be. But believe me guys, the simpler things are always working in your favor. A lot of people think that what is the sense of investing into an insurance if we can't enjoy it by ourselves? Because the ultimate person who's going to enjoy, or rather I would say get the benefit, is your loved ones. But let's understand the essence of insurance. The essence of insurance has always been that if you are not there and if you were the sole bread earner of your family, what if after you go, because of some unfortunate event, you are no more there to take care of your loved ones, this insurance is going to help them out. So instead of getting dogged by this thing, another problem with a lot of corporate employees is they feel that the corporate cover, the corporate insurance cover which is given by the corporate houses is self-sufficient. Let me tell you, once you leave the corporate world or that corporate house, that becomes nullified. So it's very important, specifically I'm talking about the health insurance, it's very important that you start considering it from an earlier age, because the earlier you start, the lower premiums you pay. The next thing which you got to understand is a very small concept called charges, and this applies everywhere. A lot of us don't realize that when we are swiping our card left, right and center, there could be some additional charges being levied on that. Forget about that. Even while you are coming into the world of stock markets, there is something called brokerages which you actually end up paying, which we don't count. We are always looking in the absolute value, what is the profit or what is the loss I'm going to make once my asset price is going to go up. But what we don't realize is there is something called brokerage charges. Likewise, when you're going into a mutual fund investment, there is something called expense ratio. It could be as little as 1%, 1.5%, but what we don't realize that over a longer period of time, when it starts compounding, it can create a bigger debt. Same goes with loans. When you're actually taking loans, although on the front picture, anything between 11 to 15% looks very low, but there is something called compounding and there is something called a universal law of 72. So when you are actually dividing the percentage by 72, you get to know in how many years that particular asset will actually double in its value. And when you start calculating your housing loans or your car loan for that matter, you realize that you have actually paid significantly higher, which you could have saved. These are like those simple hacks, which is very, very crucial and important for all of us to understand in the 21st century if we really need to prosper. And finally, there's one more area which we really need to consider, and that is parking all our funds into illiquid assets. I know India as a place is very prominently known to park most of its funds in real estate. And history has shown, at least in our country, that is relatively safer in contrast to a lot of other areas. And thanks to our ancestors who have been always telling us those stories that 20 years back in some village, they actually bought one piece of land and today that is worth XYZ amount of money. We have been told that story again and again and again, that it has got wired into our subconscious mind. But we got to understand that when we are parking everything into an illiquid asset in times of emergency, it becomes very difficult to break that particular asset and make money out of it. Likewise, when when you are actually putting your money into assets which you feel are an asset but are liabilities, that is even more dangerous. See the kind of craze youth these days are having with fancy cars. You know, it's very interesting that people are actually spending huge amount of money in luxury cars when ultimately the benefit would go to that driver who's going to drive it daily and you're going to sit behind him. So you got to understand that this comparative behavior is actually creating more dent in your financial prosperity rather than creating happiness. There are plenty of surveys which have been done which clearly state that beyond a certain threshold, money stops giving you happiness. In fact, it starts becoming depressive. There is a reason why so many rich and elite class people are struggling with mental issues. There is a reason why oftentimes in newspapers we see a rich person goes and commits suicide. Do you really think their life is not good? Of course that is good. And of course a lot of you must be thinking that okay, once I'll have that sort of money, then I can relax. But always remember, grass looks greener on the other end. So it becomes fairly easy. Even I was at that point of time and I used to think that when I have XYZ amount in my bank account, I'll be really happy. But as the Maslow's need hierarchy theory clearly suggests, when you reach over that stage, you think, what next? What next? And then it just becomes a scoring mechanism. It doesn't give you that much of happiness. In fact, more money can invite more troubles, more envy, more causes of security breaches. You become lonely. It has been said, you become lonely at the top, and that's purely right, because your friends itself, sorry to say that, will start becoming envious of you. So it's very important that once we understand all these aspects and we start making ourselves financially aware in the right format, only then, my dear friends, will be able to navigate through this complex maze. And if we are able to keep in mind all these 4-5 pointers which I have discussed in this particular session, I'm pretty sure these are not very complex to understand, but once you understand these aspects, you will be far ahead as compared to your peer groups. So that was all from my end, and I believe this particular conversation would have added some value. Thank you so much.